Okay, welcome everybody. This is DC here live in the trading room. I want to show you a couple things today. I want to show you our swing indicator through one whole week of trading. This was from Monday, February 20th all the way to the end of the week, last week on the USD JPY. And not only do I want to show you the swing indicator, but I also want to show you how professional traders trade as far as money management and how they manage trades and they get in with the order flow and momentum. You can see I have my Word document here just outlining the trade so that we can, so that you could see it visually, and as we go over it, you can follow. But here's the first trade right here. This entry, and just so you guys know, the way our indicator works is that so that it doesn't repaint, it actually will enter at the open of the next candle. Okay, so even though you see the arrow here, that arrow doesn't show up until after this candle closes. Okay, so I have indicated the entries along this, so that they're accurate. So trade 1 would have actually entered up here at 79.52. You can see it comes down and stops you out. We always recommend about a 10 pip stop loss. You want to risk the least amount possible. Kind of dip your toes in, see if that level is going to work. If it's not going to work, you get out with a small loss. So this would have came down, stopped you out for minus 10. The second entry right here at 79.52, you would have got in, rode that for a while. You can see then we have another trade signal at trade 3 here at 79.67. We would have entered another lot or whatever your minimum trade size is. We come over here to trade 4 at 79.73. We put on more of the position here, and you can see we're building a position in the direction of the order flow and momentum, which is up. We get a nice break up here. We come up to trade 5 here, and you can see that gives us a little false move, comes down and would have stopped us out right here. And then trade 6 right after comes and stops us out. So 2 trades in a row there that are minus 10. And then right here, the final trade, trade 7 in at 80.10, and you can see it takes off from there. Now the other thing I've done, we've built up that position over the whole week. The other thing I've done is a lot of people, the one criticism of looking at any kind of charts going back is that everybody says, well, it looks so simple, when you're looking back at it, and also the timing of things. I wouldn't have maybe got out at a certain point. So I cut this off right at a point where we would see a profit target. See where resistance is building up here? That would have probably been our profit target right there. And so what I'm doing here is I'm not even including any of this move here. I'm being very conservative in showing you this and basically saying, hey, this 100 pips is off the table. We probably never would have been able to hold on emotionally and gotten that in there because this resistance is showing us a valid profit target right here. So if we took all of these trades off at 80.63, you can look at my chart here, we would have had 7 total trades, 4 wins, 3 losses, 57% win percentage, which is healthy. I mean, again, if a system is telling you 90% or we haven't lost in 100 trades, I mean, you're just right there as a red flag. You're just not going to find something like that long term. This is what a professional trader would hope to do. I mean, 57% is actually a very good win percentage. But look at the money management. Your pips gained are 350 building a position like that. The pips lost are 30, and your net gain is 320 pips, and you basically almost broke even as far as wins and losses are concerned. So if you cannot wrap your head around the fact that risk and money management are the biggest keys to trading, and also from a technical side, all you have to do is really look at price action, past price action, key support and resistance levels, and order flows and momentum. And that's all you need. And you could do that on a free chart. I mean, we have our swing indicator here that you can get just to make it easier for you and help out. And these signals can even You can even run it on the alert system so that it emails you or texts you or what have you. But keep it simple. You don't need all these bells and whistles and these fancy systems. And you can see that that worked really well throughout the whole week on the USD JPY.